Hello everyone from Singapore. Today I'm here in the studio with Karen Fu, one of the most famous traders in Asia. She is trader, investor and also mentor. Hello Karen, welcome to the interview.
Thank you for having me, Lenka. I'm grateful to be here.
I couldn't wait to do the interview with you because I've been following you on social media and I know that you have been trading over 15 years and you are a great mentor to so many thousands and thousands of traders across Asia. And before we jump into all my questions that I have prepared, I would love to hear your story. How did you get into trading? And 15 years, it's a long time, long journey. So how did you get into trading?
So long story short, I try to make the long story short. Because my parents, they are stock investors and traders ever since I was born. So the moment I was born, my parents are already in the stock market. So every single day, since kindergarten, play school, I would listen to my parents talk about stock market. I had no interest. I mean, at 6 years old, of course, even you will be doing something else, right? Like playing with toys and all that. So I had no interest. But then I got exposed to it. I was like, what is this that my parents are talking about all the time? Like, it's just ticker symbols. I'm like, what's so fun about it? Then my parents were like, this makes you money when you buy a company and it does well, it makes you money. I'm like, oh, okay. So at 4 years old, I was exposed to the stock market.
At 4 years.
at 4 years old, because I was born into it, just born into it. So back then I was really curious. That's why I asked my parents, what are you guys doing all the time? So they're like, we are investing and trading in companies. But they changed the sentence to a more simple explanation and be like, when you buy companies, you can make money if it does well. Then I'm like, okay. So from play school until my high school, I was busy with studying and sports and then taking extra classes, computer classes. But I wasn't really into the stock market aspect. But I was really interested in business because when I was 12, 13, I would watch Donald Trump on The Apprentice. I don't know whether you watched The Apprentice before.
Yeah, I did.
It's a reality TV show. It was great. And then I watched that and didn't really take stock market or the financial markets really seriously because I was so busy with school. There's so much homework, so much schoolwork. And then when I graduated from high school, I pursued a diploma in engineering. So I thought I wanted to become an engineer. And then I studied that for 3 years. And then I worked as a research assistant for a water reclamation plant in Singapore. So I had to go underground and then check the sewage treatment plants and all that. I was like, okay. But I'm not super passionate about that. I was like, it's okay, but I don't really see myself becoming an engineer forever. Then I took 1 year break. I felt lost at that point in time. I graduated from the diploma. I took 1 year break. I felt really lost. I was like, so if engineering is not what I want, science is not what I want to pursue, then now what? Then I started teaching financial literacy to school kids, primary school kids in Singapore.
Nice
and
one.
Secondary school kids. And so I was teaching for about 6 months. I was like, I really like this, like talking about finance. So I teach those young kids credit cards, how to save money, budgeting. Did you have this kind of lessons back in primary school?
No, we don't. And actually, because I come from the Czech Republic and it's a really big issue that we don't teach about financial literacy at the kindergarten or at primary school, but we want to change it because we can see that it's a huge issue that, people are getting into debt because they don't understand it correctly. So it's a big issue. So thanks God, there are so many people right now that are doing the same as you did a couple of years ago, that they really want to teach young people, young kids about finances.
Yeah, I mean, even for my days back then, there was no financial literacy programs for primary school kids or high school kids. So I was like, wow, the kids nowadays are so lucky to be able to learn financial literacy. But back in my days, there was no such thing. So I realized that I really love talking about finance, then teaching finance. Then I pursued a degree in banking and finance in NTU in Singapore. So that's where I really got the formal education to learn about the financial markets. So because previously I was learning on and off from my parents, so it's not like a formal sit-down, formal education. So I decided to pursue that degree, and then I learned about stock market, financial statements, accounting, which helps with reading financial statements. And also I pursued, there were many different modules in the course, in the degree. Then there were derivatives, futures, options. I learned that too. It was very theoretical for the futures and options one. But then the stock market modules that I took, the classes that I took, they were very practical. So we were using Bloomberg terminal. Have you used the Bloomberg terminal before?
I haven't used it myself.
It took like 3 weeks of classes to learn. Even right now, I haven't fully mastered it.
I know it's not very easy to
it was
understand
like
it.
So many functions. It took me like 3 weeks to just master the basics, which is enough for me to use that to present a report to my professor. And long story short, that's how I got into trading. But at the final semester in my university, I also joined this trading competition. And then I thought to myself, this is my final year of school. I want to make my university proud. So because previously, before this final competition, I joined about like 5 to 6 competitions, and I did so badly. So badly meaning like within the first week, I blew my account. So I'm out of the competition instantly. But instead of just being discouraged, of course I was discouraged. I was like, oh, maybe trading is not for me. Like maybe what my parents are doing is not for me. I learned from those mistakes. Blown account, why? Why did I blow the account? Every single mistake. So 6 to 7 blown accounts are 6 to 7 valuable lessons for me. Okay? And then in that final competition, I told myself, I'm going to make my university proud because they took me in as a student. I don't take that for granted. So I studied so hard, researched so hard, back-tested so hard. And then, fortunately, I managed to rank number 1 in the whole entire of Singapore after competing with traders from all around Singapore. And that was after many, many rounds of failures. So from then on...
So what did you do differently that you won this one?
Oh, what did I do differently? I took less trades actually.
Less trades?
That was a great question. I took less trades because in the previous competitions, I thought the more trades I open, the more profitable I'll become. But in this final one, I took less trades, but higher quality, higher probability trades.
Let's talk about the trading tournament, actually, the competition, because we do like online trading tournaments and live trading tournaments. The next one is going to be in Cape Town next week, and I can't wait to be part of it again. What would you advise to people who participate in trading tournaments, in order to win the trading tournament? Because you have been participating in several trading tournaments.
Yep.
You mentioned that some of them you didn't win.
Yeah.
The one you were the first one, so you won the trading tournament. So if you could, give one advice how to win the trading tournament. So let's say, because you know that we've been organizing the trading tournaments as well. So if you could give one advice to all participants how to win the trading tournament, what advice would you give them?
I realized one very important thing now, because I am also a competitive swimmer on the side. Since I was high school, I was a competitive swimmer. I realized that the less I focus on oh, I must get number one, I must get the gold medal, the more tense I'll become, and then the worse the results will turn out to be. Same for the competitions that I join in trading. The more I look at the rankings every single day, oh, who's surpassing me, who's doing better than me, I would lose focus on my own process. I would force trades just to surpass them. Whereas if I don't look at the ranking that much, focus on myself, focus on the process, then the results will somehow take care of itself. So focus on the process, focus on executing the best trades that you can execute when nobody is looking. And then the rankings will take care of itself. And even if you rank number one, that is a bonus in itself.
So you would take less trades than more, and then don't focus on people around you or on the ranking. Any other particular strategy? Like what currency pair would you trade?
The strategies, okay, this is a great question, because I would avoid the volatile currencies, meaning the exotic pairs. Those mess with your emotions like crazy. What I'll focus mostly on are the major pairs. They would be volatile sometimes, but not as volatile as those exotic pairs. So focus on those, and if the competition allows you to trade gold, it's fine too. Because for that competition that I did last time, it was gold plus forex plus a bit of stocks. So and also try to avoid crypto if you don't know what you are doing. You only trade it if you understand what crypto market is all about.
Karen, I know that you have been trading for 15 years. You are also an investor, and you are also a mentor. Let's talk about all the information that actually I would love to focus right now. And it's like that in 2026, traders have more information, more tools, more education, but still not everyone is making money. Where is the catch?
Now the thing is, nowadays we can use ChatGPT AI to answer all our questions. But I don't know whether you use ChatGPT or AI every single day. Do you use them?
Quite often, yeah.
Quite a few, quite often. You realize that sometimes AI would be wrong about things. Like they would state it confidently, answer you confidently, and then insist that I don't know how to address, insist that he is correct. ChatGPT does that sometimes. And then you defend himself like, no, you're wrong, I'm correct, that kind of thing. But with AI and the internet, how come traders are still not profitable? It's the same problem that goes back to the internet era. How come with all this information online, with YouTube, TikTok, tons of trading websites, people are still not profitable? Information overload. Information overload. Libraries, free books, tons of free books. How come people are not profitable? Information overload. So many stuff out there. Which one do I pay attention to? So the worst thing that a trader can encounter is having too much signals. Buy, sell, do this, do that, until they cannot follow a single strategy. They cannot follow a single plan. So they jump from this strategy to that strategy, this strategy, that strategy. Then, one trading guru is telling you to buy. Then, okay, let me just buy now. So you realize how scattered we are right now. In fact, when you're trading in the 90s, there's less information overload. I would say it is easier on the mental side of trading because you only have this one plan that you have. And maybe the one mentor that you consulted. And that would be easier for a trader back then, despite the lack of information. Because for my parents back then, they had physical annual reports, and that's all they have. That's all they look at most of the time, and only a handful of great websites to refer to. And hence it was actually easier for them to pick better stocks. So in order to overcome this information overload, the best thing that a trader can do in this era of AI, everything, is to find a great mentor to learn from. Because when you have a great mentor, your mentor will just tell you, just follow this checklist, ignore everything else. Isn't that a lot easier? Life is a lot easier instead of being distracted by all the websites, social media, TikTok.
You mentioned the information overload. So if you could pick one thing that traders, beginners should focus on.
One thing, as in like a resource?
I mean, like, in order to get into trading, because like, you know, before you start trading, you feel like trading is very easy and very simple because you can see it all over the social media, how easy it is. But then when you actually want to start, it's pretty hard to decide like what to trade, how to trade, like whether to journal or not journal, what trading platform to choose. So if you could mention like one thing, how to start trading.
How to start trading? Okay, that's a very great question. A lot of beginner traders, they also struggle with, Karen, what time frame do I trade? What platform do I use? Then what asset do I trade? Stocks, crypto, forex? And even if I choose forex, then what currency pair do I trade? Exotic pairs, minor pairs, major pairs, there's so many things. Again, it comes down to if you have a great mentor, that mentor will just tell you, first step, do this, second step, do this, third step, do this. But a lot of people nowadays, they cannot afford a mentor. Then what do we do? The first thing that you can do is read a high quality trading and investing book. Now, again, you can borrow from the library for free. Like for those traders who cannot afford to even buy a book. Or you can learn from a high quality mentor on YouTube for free. Now the danger with this is that a lot of beginner traders, they don't know what a high quality mentor is like. So because like you mentioned just now, there are a lot of fake content creators.
Yeah, content creators. I wouldn't call them traders.
content creators and traders. And then there are people who really had the experience, had a finance background, and then they started teaching. So there are two qualities, I would say, two things that you should look at to pick a high quality mentor. First thing first, the best, I would say one of the best qualities is that the mentor has to have a finance background. So by finance background, he or she could be a former prop firm trader, a former investment bank trader, analyst, has a finance degree, and this shows that this person is truly committed to the financial market rather than somebody who just read a few articles on Google and then start teaching as a trader on YouTube, content creator. That's the easy thing to do. Like if somebody wants to so-called scam people, they wouldn't go through that 3 years of finance degree, then after that 5 years of investment bank. Why would somebody do that if they want that quick money from selling courses to people, right? They'll just go straight in, just copy content, copy another content creator, the script, use it as their own script, and then that's the fastest way to get started. So the first thing is finance background. Then the second thing is that they have to have the trading results. The trading results, it can be formed in the form of competitions, live trading results. Demo trading, I wouldn't say is that important, but live trading results and also competition results are very important. So these two things. But I would say the first criteria is more important. That person has really went through the whole entire process. Finance degree, trading on their own, trading for another company, and that's the best combination.
Out of curiosity, what most of the Asian traders trade? Because is it like, do they go for some like exotic pairs?
Asian traders.
Yeah.
It would depend on which part of Asia.
Tell me a little bit more about it, because
Okay.
I haven't done that many interviews with Asian traders, so I would be just interested whether they are focused on different pairs.
Actually, it's a great question, because last time I went to London, I was asked this question too, which is a very interesting question. And it will depend on which country in Asia. Because there are certain countries, I wouldn't mention the name because otherwise I'll get cancelled. When you go to that country, on average, not everyone, okay, not trying to make assumptions, on average, there's this culture whereby people would gamble trading. So in that sort of culture, you would have a lot of traders who would like to go for the 1 to 4,000 leverage account. 1 is to 4,000 leverage, 1 is to 3,000 leverage, crazy leverage levels, they would love that. And when you go there and do that, it will actually be normal. But when you go to a more conservative country in Asia, for example, like Singapore, people here like to save money. They like to preserve capital. So a lot of the older generation, okay, also depends on generation. A lot of the older generations, they like the traditional assets a lot more, like the blue chip stocks. Blue chip stocks. So for example, in Singapore would be the banks, okay, and then they would love the dividends that come with those blue chip stocks too. So it's very conservative. Whereas for the younger generation in Singapore, despite Singapore being a relatively more conservative country, they would prefer the more exciting assets like crypto and some of them meme stocks. For millennials, maybe they would have a mix of different types of assets. They would like stocks, forex. So the younger the crowd, the more volatile the asset. Then the older the crowd, the less volatile the asset. So it depends on a lot of things.
For traders is a prop trading firm, and we were pretty. When we came here, we realized that not that many traders actually know prop trading firms. Not only like for traders, but any other prop trading firm. Why?
First thing first, prop trading firms, it's relatively still new in Singapore. There's currently not one prop trading firm where Singaporeans are like, oh, if you want to go for prop trading, you go with this. Whereas for brokers, it's more established in Singapore. Like it's been here since day one. Okay, but for prop trading, so far, there's not a well-known one that people can go to. Maybe
maybe we can be the first one that
maybe
everyone
you guys
knows.
could be. Let's wait for who's the first one to establish themselves here. But in the next 10 years, 20 years, people will be more open to it, especially with more finance conferences that are held in Singapore. Okay, and then people will be more exposed to it. Then there'll be more prop traders in Singapore.
What about you? Have you been trading with any prop firm?
Yes. In fact, a few years ago, I was with a few of the well-known prop firms. But right now, I try to focus more on my own trading and investing, because one thing that prop firms help you is that it helps you hone your risk management skills. So once you have gotten that part taken care of, you can focus on your own trading. And also, for people who don't have enough capital, they would go for prop firms to get that capital. But if you have your own capital, you don't need to feel too restricted by a prop firm. You can trade your own, and then you can set your own risk management rules.
I think it's like prop trading that we see is like that our customers are either people that don't have their own trading capital, so it's the easiest way how to start trading, or there is the second type of people that they have a long-term investment portfolio. Like I have my 10 stocks in my portfolio that I
Your
don't
10
want to
stocks.
sell.
Oh, okay.
And but I want to trade, right? So
Yeah.
because I was like thinking whether I should sell some stocks in order to get capital to trade, or just go with the prop trading firm. And I think it's pretty good choice how to do it. Or there are like other people that they started with the prop firm, and as soon as they got their first payout, the payout they use for like investing. So I think it's great way how you can combine investing and trading,
Yeah.
because like then you can build your own wealth through long-term investment, but still trade like on daily basis.
What stocks do you own, by the way?
What stocks? I have Alibaba.
Nice.
I have Alibaba, Amazon, Alphabet, Tesla as well. Then what other stocks? I have
Mainly US stocks.
US stocks. I of course that I had Apple as well, but I sold it.
Okay. Okay.
And Nvidia I have got as well. And I honestly the other stock that I got shocked by was like Victoria's Secret.
Yeah.
Because I was like tweeting about Victoria's Secret last year, because I visited their shop in Miami, and I was like, oh my gosh, this company like it's over, because I remember Victoria's Secret like 10-15 years ago, like when you went into the shop, you were overwhelmed. Everyone wanted to wear Victoria's Secret stuff.
Yes.
And then like last year when I went there, I was like, oh my gosh, it was so sad to hear the shop basically. And when I checked the stock price recently, I think it went up by 60%.
Oh,
and I was just following the story, and then it was actually because of their Victoria's Secret show that actually it got back. I think they stopped organizing the Victoria's Secret show like for a few years because they had some marketing issue with it, but then last year they got back with the show, and then it was a huge marketing, really huge exposure for them, and their sales went up, and then the downloads of their app went up. And recently I realized especially on Instagram, that like every single girl wants to be part of the Victoria's Secret show. I don't know whether you have seen it or not. And then I was like, oh my God, this is absolutely amazing marketing campaign that you as a brand don't do, but the people for you are doing it. And I'm just thinking whether I should purchase the stock again and actually bet on this campaign that they are running, because I'm sure that their sales will
increase.
Will increase definitely, because everyone is just crazy, like especially all the female influencers that are like great looking. They want to get into this particular show, so they do whatever they can to promote Victoria's Secret on social media. So yeah, I was just looking at this company actually, and then I was also following Lululemon.
Oh, Lululemon, yes.
Because like a couple of years ago, I wanted to invest in this company, and then I was like, let me not do it. And then the stock went like up by 50% within few months. But I can see now how they are not really doing great anymore. So yeah. So, but I love going through the stocks, because like in Czech, I have also a podcast, How to Invest. So I invite usually like stock investors, and we talk about different companies, different strategies. Most of them are like portfolio managers of big equity funds. And also in Czech, I was organizing the biggest investment conference about stock picking. So like I love investing in stocks as well. So
investing long term.
Yeah, investing in long term. But on the other hand, I love these prop firms as well, because you can trade as well. So it's like two different activities, but you can combine them all together.
Yeah.
Okay, going back to trading. Tell me a little bit more about your trading. So what do you trade? What's your strategy? Whatever you can.
For trading, so we are talking about trading rather than the investing.
Yeah, because like this is more for traders podcast. So for traders, it's more about trading. So I would love to just focus on trading.
Okay, so for my trading, it would be focus more on the long-term trading. So in investing, a lot of investors would use this bottom-up strategy. Whereas for me in forex trading, let's talk forex trading specifically, it will be a top-down strategy. So it will be the big picture. So it's like an inverted pyramid. So the top part would be the fundamentals, where I'll look at the global macro factors, economic indicators, then add that with sentiment, add that with intermarket analysis. So that would be the top part of the pyramid. So it's the big picture. And this part would be used to generate ideas. So let's say the stock market is going up right now because of high economic growth. Then that would be a potential good trade idea for Aussie yen, because Aussie yen, it moves in line with the stock market, meaning it's positively correlated. So after that idea is generated, then I'll move down to the bottom of the pyramid, which is where the technical analysis comes in. And this is where you will have your price action indicators. This is what I look at the bottom to determine when to enter the trade. So the idea is there, is in my watch list. But when to enter, I will look at the indicators price action. So when that tells me to buy, this is a good time to enter, then I'll use technical analysis for the entry. So a lot of people will say that is the global macro trading strategy, and it's used by Paul Tudor Jones, used by George Soros, used by Ray Dalio, who also trades forex as a hedge fund manager. So that's what I use.
So what currency pair do you usually trade?
I trade a few currency pairs, but I really like the Aussie yen and Aussie dollar, because Australian dollar is a high yield currency, so it has high interest rate, relatively higher interest rate as compared to yen, which has negative interest rate most of the time. So when you look at the interest rate differential, is quite high. So when the interest rate differential is very high, what would happen is that the currency would have a tendency to go up most of the time, because a lot of investment banks, they would buy it, okay, to take advantage of the interest rate differential. So they do a lot of carry trading, which is one of the hedge fund strategies. But I like Aussie yen, Aussie dollar. And then sometimes when the conditions are right, I would try to trade dollar yen, euro dollar. But nowadays it's mostly the Australian dollar, Canadian dollar, Canadian yen. So again, it's high yield paired with low yield. So in my first 2 years, I love trading dollar yen and euro dollar. But nowadays it's more volatile, especially with AI high frequency trading. And also dollar yen, because both are safe haven currencies, so it's more tricky to trade it long term. It's good for day traders than swing traders, but then for long term, it is, I wouldn't say harder, it is more tricky. Whereas for Aussie yen, because it's a risk currency paired with a safe haven currency, then you know during good times it's going to go up. During bad times it's going to go on a nice downtrend. So it's so-called easier to predict and trade.
So what's the perfect entry point for you?
Perfect entry point. Oh wow, that's a good question. You know, in trading, we would always want to find that perfect entry point, but there's no perfect entry point. There's only good quality entry point. So when I find a good quality entry point, that would look something like, okay, fundamentals are in line with the technicals. So have you read this book called Market Wizards?
Yeah, I have.
Market Wizards. So it's a great book. And then you realize that a lot of traders inside, they would mention the best trades are those that are in line. In line meaning fundamentals are in line with technicals. And then they'll use both. Of course, there are traders who can make technicals work alone, fundamentals work alone. But I realized that a lot of the top traders that I know, even the ones that you've interviewed, some of them combine both fundamentals, technicals. So fundamentals would give me a long bias. Technicals would also give me a long bias, meaning a nice uptrend. Preferably, here's what the perfect trade comes in, okay? Retracement. I'll enter on a retracement, have a good risk to reward ratio, and this will be so-called the perfect trade to go into.
And of course, everyone talks about the best entry point.
Yep.
But what about the exit point? When to sell?
Oh, that's a great question. A lot of people
Because it's even harder, right?
Yeah. Because a lot of people, a lot of beginner traders, it's all about entry, where to enter. But two traders could enter at the same exact price, but one could make money, one could lose money because of the way they exit. So if you study the top traders, they'll often say, you know what, exit is actually more important than entry. And a lot of traders don't realize that. In fact, a lot of beginner traders, they would enter, then they would set their target price after that. They'll enter a trade, then they'll be like, oh, by the way, I forgot to set my target price and stop loss. Then they'll just anyhow pick a nice exit point. Even for stocks trading, stock investing, the exit is more important than entry.
So what is your usually exit point?
Exit, it will depend on the strategy. So if I'm using global macro trading, when the fundamentals shift from bullish to bearish, more of a bearish sentiment, then I would either gradually scale out or exit completely. I will scale out when the long bias is still a little bit there. So I would take half of the profits and then let the whole trend run. And then take the whole entire thing out when the whole sentiment is turned bearish. So that's how I would exit. But if it's a day trade, which I sometimes make once in a blue moon, day trade, which is like only a few hours, then I would just exit at the most recent high. Just simple, straightforward as that. So let's say previous day high is this level, I'll just exit here.
So how many trades a month do you usually have?
Trades a month, I would say, because it's 1 to 2 trades per week a lot of times, because I'm a swing trader and position trader. If you add 2 trades a week into 1 month, it would be like 8 to 10 trades. 8 to 10 trades.
And what do you think about scalping? Like scalping and day trading?
Scalping, I used to do that in my first year of trading.
It's very difficult, right? Mentally.
It's hard mentally. And also, I was so busy scalping that I did not really skip class, but didn't really listen to the professor when she's teaching. So she's teaching taxes or accounting, I'll just be scalping. And it is very unhealthy because I make 50 trades a day back then, but then I'm paying a lot of fees to brokers, and then also wasn't profitable and more stressed out. Maybe I make a few dollars a day, but then I was stressed out. But then the moment I move to higher time frames, the profits not only increase, but I also have more time for myself, and also it's less stressful. So, and also you pay less fees to the broker. So it's a.
You mentioned that when you were scalping, you were not really profitable, but then it changed. So, at what stage it changed? What helped you become profitable?
That's a good question. What is the turning point? Okay, what's the turning point? That's a great question. There were a couple of things that I changed. Definitely, I stopped scalping and then I switched to the hourly time frame and above. That's one of the components, but I would say the main thing was I switched from focusing on trading strategy, indicators, price action all the time, into risk management. Risk management. So in my first few years, I think the second or third year, I would have 50 straight wins. 50 straight wins. And then my mentor would be like, oh, 50 straight wins, okay. And then it would take just one trade of badly managed risk trade to wipe out that 50 straight wins.
Oh my God, seriously?
So it's like, because the 50 straight wins, even though it looks nice on paper, on theory, those 50 straight wins were achieved by taking small profits. Take profit, take. And then the stop loss was either super wide or no stop loss at all. So when somebody sees that on paper, wow, 50 straight wins, but what they don't see is the downside. Downside. Are you protecting your losses in case something goes wrongly? So that one day, when a trade goes down, and there's no stop loss, that one trade wiped out the previous 3 months of hard work. So
it must have been very frustrating.
It was frustrating, and I'm sure a lot of traders can relate to this too.
Absolutely.
And
I'm one of them.
You're one of them. In fact, many traders, they always say, Karen, traded for 3 months. That only took one trade to wipe out everything. It's the same story all over again. When I focus on risk management, I added a reasonable stop loss, not too tight, a reasonable level of stop loss. And then I make sure that every single trade that I make, I'm risking 2% per trade, 1% per trade. Previously, it was haphazard. It was like 10% per trade, 5% per trade. If I'm feeling good, 15% per trade. The lot size calculation wasn't there in my first 3 years. And I was making good profits because I wasn't calculating my lot size. I was like, wow, I'm doing so well. That is an illusion that a lot of traders experience in the first 3 years. I'm doing so well, so I can afford to increase my lot size. So I can afford to increase my risk per trade. And it takes that one losing trade to teach us a lesson. Risk management is that important. So you do realize that there are two types. You do realize that when you become experienced, you appreciate risk management a lot more. How do you tell the difference between a beginner trader and experienced trader? The experienced trader will tell you risk management is way more important than strategy. So I focus more on risk management, calculating my lot size, minimizing my maximum percentage drawdown to 30%, and then setting a tight, not too tight, okay, reasonable stop loss level, and then the profits will take care of themselves. So my win rate went down, but my risk to reward ratio improved, and then the profits improved. Whereas previously, the win rate was super high, but then the risk to reward was really bad, and then the trading performance in the long term was a blown account. So risk management is the most important thing. In fact, when you read market wizards, you realize that a lot of them say, risk management is my secret. They wouldn't say, oh, this indicator, use this indicator, this is the secret. You never see a top market wizard trader say that. Often it's risk management or something else.
Absolutely. You know, when a trader experience losing streak, like several losing trades in a row, how to manage emotions in this situation? Because it's not very easy, right? When you keep losing money, and then it's very hard to get back on the track.
Yeah, it's very discouraging. So that's a good question. How do traders bounce back from a losing streak? So for beginners, it's definitely a very hard thing to come back from, to get back to trading. It's hard because in my first year, I also experienced that myself, like losing streaks in a live account, and then I just don't feel like trading for many weeks. So how do we handle that? Because in our first few years of trading, a lot of traders have this impression that when I lose money, means I'm not a good trader. So when we have this definition and perception of losing trades, then that is the moment that will become discouraged. Whereas when you become experienced, you realize that the losses are part of becoming a profitable trader. So the top traders in the world, top investors in the world, they have a win rate of 60% or less, in between 40 to 60%. So imagine this, the top traders and investors in the world, they have a win rate of 40 to 66% only, rather than 90%, 95% super high, meaning that losses are part of it. So when they experience losses, they don't see those losses as, oh, I'm losing money. They see those losses as lessons. Every single loss is a lesson. The greatest losses, the greatest losing trades are actually your best trading lessons. So if you look at that in that manner, it will help you overcome the losing streak. But also another way to overcome it is that the period in which you lose money is required for your trading plan to work out. Because let's say your trading strategy is 60% win rate. It is proven to be profitable. And let's say if this month you're in an unlucky streak, 6 losing trades for your strategy. A lot of beginner traders, they will quit at that point in time. But you realize that 6 losing trades is needed for the winning trades to come later. So if you see those losing trades as part of it, you'll be able to overcome the losing streak for this period. Also, if you think of it in terms of an entrepreneur, when my expenses increase this month, does this mean I should close down my business? So let's say the expenses from my raw materials, it increased a bit this month. Does this mean that I should close down my business? No, because I know that my business, when it makes money, the revenue will cover up the cost of my business. And I know that based on research, this business is going to be profitable. So if you think of your losing trades as a business expense that you gotta pay to keep your business running, so that in the long term you can make money at the end of the year, meaning think big picture, long term, then you'll be able to overcome this temporary expense, meaning your losing streak.
You know, I know that many traders make mistakes, but not everyone actually learns from them.
Yep.
So what's the easiest way to learn from every single mistake we make?
Okay, so to learn from mistakes now, for beginner traders, you realize that it's hard for them to learn from mistakes because some people, I've seen on social media, take the laptop, then it's like destroy the trading screens and all that. So like, who has time to learn from mistakes and all that? And it's very emotional for beginner traders when they experience losses. So they'll just bang the table and all that, tear their trading plan and all that. I think some people can relate to this. But then how do you just sit down and learn from that mistake? Now, when you experience a losing trade, it's okay. We are all human. Just get away for a while. Get away for a while. Don't think about it. Take a 1 day break if you need to. Few days break if you need to. Then after 2 or 3 days, you realize that you're a lot more calm. Your mind is a lot clearer. Then you'll be able to come back to your laptop and be like, hey, what's wrong with this trade? So don't have to force yourself and be like, I gotta learn from it right now. I gotta sit down and study this losing trade right now while I'm frustrated, while I'm angry, while I'm sad. Don't have to, okay? Get away, come back. You'll be able to think a lot more clearly and be able to find lessons that you weren't able to as compared to if you were to learn from it right after you lose that trade.
I know that you love trading psychology. So tell me what every single trader should master in trading psychology.
Okay, this is a great topic to talk about. Trading psychology, there's a lot of different topics that we can talk about, right? Fear and greed, confidence, overconfidence, confirmation bias. But if you really look at the top traders in the world, and also what investment banks look at when they hire their traders, because a lot of big money is on the line. So when investment banks hire traders, they want the best of the best. So nowadays it's not so much of good grades anymore, because back then when I was studying for my finance degree, I did apply for JP Morgan, Goldman Sachs and all that. And good grades right now is just the minimum bare requirement. One thing that would help you stand out, what they really look at nowadays, is if you have an athletic background. Like if you play sports in school, you compete in sports. Why do investment banks want traders who has a sports background aside from good grades? Because they have discipline. Discipline to follow your trading plan, follow your strategy, discipline to manage risk properly, discipline to study the markets, research the markets, discipline to bounce back from failure. Those cannot be taught in school, but it can be cultivated from your daily practices, one of which is if you play sports in school. Because sports, do you play sports in school last time?
I didn't, unfortunately.
But even if you work out like regularly, okay, you realize, man, this is a hard thing to do, quite a hard thing to maintain every single day. So to those who compete in sports, they have to double the amount of training session they have. It's a lot of discipline, basically. And if you can cultivate discipline as a trader, you can do a lot of things well.
Absolutely.
You can study all the indicators you want. You can study all the hacks you want on social media. But if you don't have discipline to implement these tools, these hacks, then nothing is going to work. That's why just now when you mentioned, why is there so much information online and yet people still can't make money? Because they don't have the discipline to apply those tips, those hacks, those secrets properly. So
yeah, absolutely. They
discipline
watch it,
is
but
most
they never apply it.
Yeah.
Exactly.
They never apply.
Yeah, you're absolutely right.
So how do we cultivate this discipline?
So is it even possible to become disciplined if you don't have the athletic background?
Yeah, definitely. That's a very, very great question. A lot of people don't have the athletic background. They don't play sports in school. So then does this mean that it's harder to become a disciplined trader? Now the thing is, have you read this book called Atomic Habits?
I did.
It's a great book, right?
Yeah.
And in that book, the author talked about the fact that, you can have all the willpower that you want. You can try to build the discipline all you want. You can have all the discipline hacks all you want. Like if you want to quit smoking, just remove the cigarette from your drawer. That is the willpower hack, but it's not going to last. You're going to find some way to go out and then buy the cigarette pack. Regardless of where you put it, where you hide it, you're going to find some way to smoke again, okay? In that book, I don't know if you remember, the author mentioned the best way to change, to really remove that bad habit, the smoking habit, regardless of what bad habit that you have, okay, is to change your self-image.
What do you mean by that?
So just now was mentioning about the smoking example, right? So because someone in my family used to be a compulsive smoker and I helped him stop smoking. And one of the ways is, like you mentioned, and I also mentioned just now, is to change your self-image. There's a big difference between I am a former smoker who wants to stop smoking with I'm just not a smoker. That's not what I do. The first one is a smoker trying to stop smoking. Now, if you see yourself that way, you'll never stop, or it'll be super hard to stop. But if you see yourself as I'm just not a smoker, that's not what I do, then you will be able to stop it easily. If you want to become anything, marathon runner, you're not an athlete back in school. You are not fit right now. Let's say right now you are unhealthy, you're not fit, and then you're overweight, okay? And you want to become a marathon runner. Then it's like, how do I start from there? How do I start from here? So instead of seeing yourself as I'm an overweight, unhealthy person trying to become a marathon runner, on day one, you just see yourself as I'm a marathon runner. That's what I do. So when you see people who are more disciplined, it's not that they are born more disciplined. It's just that that person, that marathon runner is who they are. So when that person wakes up, put on running shoes, put on workout clothes, not because he or she is more disciplined, but because that's what I am, so that's what I do. So naturally, I should do this naturally. Of course, it's going to still take willpower, a bit of discipline, but it would be a lot easier for you to execute your habits every single day. So when you see yourself as a professional trader on day one, the moment you want to open this trade when you're not supposed to, when you see yourself as a professional trader, you'll be like, would a professional trader open this trade, break this trading plan? The answer is no. So naturally, you'll be disciplined enough to not enter that trade. So that's the power of self-image.
You know, one of the things that most of the traders struggle with is overtrading. How to avoid overtrading? I know myself that for me, if something goes wrong, I want to get it back. And on the other hand, for me, doing nothing, I mean, like just watching the charts, because I'm not patient at all. So it's difficult not to trade as well. So overtrading, how to avoid overtrading?
Definitely for some people, for some traders, they will find it hard to not trade. Because let's say if your self-image, again, comes down to self-image, is a day trader, and if you're not trading today, you feel like, hey, am I a trader or not, right? So how do you avoid overtrading? One of which is focusing on the quality of the trades rather than quantity. So if you have this mindset that quality trades are better than quantity, then you would be naturally disciplined to take the best quality trades ever rather than taking many different trades. And also, it really helps if you move to the higher time frames. Because in the higher time frames, there wouldn't be a lot of trades to enter into. There would be only 1 to 2 high quality trades to enter into. If you really want to avoid overtrading, move to the higher time frames, H4 and above, or you can go H1, bare minimum, H1 and above. If you go anything below that, you'll be tempted to trade more because the price is moving all the time. Whereas in the higher time frames, it takes 4 hours to form one candle. So the price action is slower, you'll be tempted to make less trades too. So that's one hack you can follow.
If you could mention few steps when to enter the trade, what steps should every single trader take?
Few steps. So if we only look at technical analysis, of course, I follow the whole inverted pyramid, which is the global macro trading strategy. So if we only look at the technicals part, okay, assuming that the fundamentals are telling me I should go long, we have a long bias. Then for technicals, I would want to wait for the price to retrace to the mean. So meaning if I have a 200 moving average, I would want the price to retrace to that level, ideally with a level of confluence. So for example, it could be a demand zone at that level, plus the moving average testing the price action, plus a bullish confirmation in the candlestick pattern. So that would be a very simple, easy setup to enter into. And then I would just ride the trend until it's a good time to exit.
If we talk about the technical analysis, price action or indicators, what should I, as a trader beginner, look at?
Yeah, that's a good question. For price action indicators, now the thing is, indicators, they are derivatives, meaning they derive their value from the price action. So it's a good tool that we can use for confirmation, but it shouldn't be the only tool that we should use. So the main thing we should look at is definitely price action, candlesticks, okay, because that gives us the raw data, the raw price. So if you can, rely on only price action. But if you need indicators, at most one moving average, then in fact that's enough. Two to three moving averages, that's enough. But if you need one more indicator, you can add one momentum indicator, for example, CCI or RSI, depending on your risk appetite. Okay, that's all you need. That's all you need. In fact, a lot of traders, they don't use indicators at all. Price action is enough, but if you really need moving averages, candlesticks enough. Simple, straightforward.
Can you become successful in trading just using technical analysis?
There are traders who could use technical analysis and then make money, but in this era of AI, of trading being more connected, interconnected than ever, the more we have to look at fundamental factors, central banks, interest rates, monetary policy, because you do realize that in the recent Iran war, if we only look at technical analysis, we'll be constantly surprised. The chart tells me to buy, how come the whole entire thing crashed? Because if you ignore fundamentals, that's what's going to happen. So regardless of whether you're a day trader, swing trader, position trader, it's better to look at fundamentals in addition to technical analysis.
What do you think most of the traders get wrong about the technical analysis?
What do most traders get wrong about technical analysis? I would say there are a lot of misconceptions about technical analysis, but one of which is that there's a secret holy grail indicator that once you search hard enough, you'll be able to find it, which is, I understand where you're coming from, but then there's no perfect indicator, there's no perfect trade. The only thing that will change the whole entire result for you is how you apply those indicators with risk management, with proper good risk management. Because you can have the best indicators in the world, the most accurate indicators in the world, but if your risk management is not good, you still lose money. So even if you find a perfect indicator by a perfect legendary investor with a 90% win rate, you can still lose money if your risk management and trading psychology is not there. So if anything, find a reasonable, good, not perfect indicator, okay? And then work and hone on your risk management and trading psychology.
And if you could pick just one indicator, which one would you pick?
I would say moving averages, especially the long-term moving averages. I used to go with the super short moving averages like 10 SMA, 10 EMA, but you realize that the investment banks, the big boys, they also use long-term moving averages a lot, and one of which is the 200 moving averages. You realize that investment banks, even hedge funds, some of those hedge funds, they also use this indicator. Even if you watch something like CNBC, Bloomberg, a lot of times they somehow also use this moving average. But of course, it's not everything, but it is very helpful in helping you finding the current trend of that market so that you won't trade against the trend.
What do you think is overhyped in trading in 2026?
Overhyped. Oh, there's a lot of things that are overhyped. It's a good question, you know. Overhyped in trading. There's a lot of hype on social media. Way too much hype. AI trading. By AI trading, I mean like, let me ask ChatGPT to give me signals. Now that's dangerous. Let me ask ChatGPT to tell me what to buy now, what to short sell now. That's very dangerous because first thing first, when you ask ChatGPT or any AI to give you signals, it's going to be wrong, just like humans. And when it's wrong, you wouldn't know it. And even when it's a correct trade, wrong trade, you wouldn't learn from the lesson. You would rely on AI all the time to give you signals. And you wouldn't learn a single thing. You ask AI to help you analyze the charts. Should I enter now? You wouldn't learn a single thing. Even if you make the trade, you make money, you lose money, you wouldn't learn a single thing. So use AI as an assistant rather than the main source of trading signal that determines whether you should buy or sell. You should do your own research first, okay? You should determine whether you should buy or sell, then use AI to confirm. If the AI says buy, which is in line with your own research, now that is a better trade.
Yourself, do you use AI
Yes,
for trading?
I use every day to research, but not to do a trading signal. Should I buy or sell?
If we talk about signals, do you think that buying signals work and you can actually make money from copying someone?
Okay, so for copy trading, so you're talking about buying signals, which is separate from the copy trading aspect. So there are two things, okay, that Lenka mentioned is signals, following signals, and copy trading. Okay, so the first one, following signals, buying signals, VIP signals, comes down to who you buy it from. There are so many Telegram groups nowadays, even fake ones, fake careful ones. By the way, I'm not on Telegram providing signals, those are fake accounts. They just provide signals. And then it's my name, my picture, then people think it's me, and then they follow. Depends on who you buy and follow. It can work for some people. But when it comes to copy trading, also very important. Depends on who you copy. Now, a lot of beginner traders, they make this mistake of copying the profitable traders. Meaning they just look at the ROI of that trader and then they'll copy. Again, they fail to look at one very important thing, which is the drawdown that trader has. So if that trader is making 100% ROI this month, but the drawdown is like 150%, would you copy this trader? A bit risky, right? A bit risky. Whereas if a trader is making 50%, only 50% ROI this month, but the drawdown per month is 10%, would you copy this trader? For sure, right? So copy the traders that have a good risk to reward ratio, meaning return to risk, return to loss ratio. So also depends on who you copy. Same with signals.
If you talk about successful traders, so what about you? What was the best trade you have ever done?
Best trade I've ever done. In fact, I would say the so-called best trades that I've ever done are those that give me the most valuable lessons.
Mm-hmm.
So even if you read market research, you realize that a lot of them say the best trades that I've made are those that have lost tons of money,
Mm-hmm.
because they give me the most valuable lessons
Mm-hmm.
that I can't obtain from paying a mentor.
Mm-hmm.
So I would say the best trading lessons are those in my first year,
Mm-hmm.
first year of trading.
Mm-hmm.
Blown tons of accounts, but I've learned so much from that year,
Mm-hmm. Mm-hmm.
more so than the later years.
Mm-hmm.
Because later years, I am making more winning trades.
Mhm.
So I wouldn't learn that much from those trades.
Mm-hmm.
But from those losing trades in the first 3 years, they are the most valuable. So, of course, I've lost so many trading accounts, blown so many trading accounts. So I couldn't tell you which one particular trade that is most valuable. I would say that's one where I didn't put a stop loss, and that one trade that I made wiped out the 50 trades, which I mentioned to you just now. That was most valuable. Yeah. That really taught me the importance of risk management. I think that was the main turning point.
When I did an interview with Marcy, she actually mentioned that she lost $250,000 in trading.
Lost 250,000.
She lost, not in one single trade, but
Total.
like in total, like when she was learning trading, that she lost over like 250, and it was a valuable lesson for her. But it taught her a lot, and now she's one of the most successful traders like in the world. So I think it's part of the game, right?
Yeah, part of the game.
Absolutely. Was there a moment in your trading career that you wanted to give up? Sometimes people think like, hey, so trading is not for me, so I should find something else to do.
Definitely, before I won that competition, the final semester, I lost so many trading competitions. I lost so many times that I felt like, I not only let my university down. Of course, I don't think they care too much anyway. But then I felt like I let my school down. Like they accepted me, but then I still couldn't get any results for them. I let them down. And then I felt like I should quit trading because I just kept losing money. And also I have invested so much in books, mentors, and then I felt like despite investing in all these books and mentors, I'm still losing money. Then is this really not for me? But then you realize that, I don't know whether you have heard of this story whereby this US investing champion, okay, the typical trader takes at least 3 years to become profitable. But this US investing champion, he wrote this book called Trade Like a Stock Market Wizard. I don't know whether you have read that before.
I haven't read the full book, but I have read some summary.
You read some of them. He took 6 years to become profitable. Now, on his 5th year, he could easily say, this is not for me. Typical trader takes 3 years. And I take 6 years just to break even, to become profitable. And yet he still kept going. And he read, I think, more than 1,000 books.
Wow.
On trading and investing. And I was really inspired by that. So at that moment, I decided, okay, let me give it one more shot during that last semester. So that really inspired me to keep going.
I have the same strategy, that it's so easy to, give up after one mistake, when, something goes wrong.
Yeah.
But then I'll always say to myself, let me try it 10 times and then decide. And it helps me a lot during those giving up moments, because then you realize that no one became successful after one attempt, right? So, and I think it's the same with trading, that most of the traders that get into trading, then that they got into trading just because they were watching someone on Instagram, right? That trading is easy, trading is very simple, you can learn trading within 10 minutes while watching some YouTube tutorial, but then they realize it's not like that. And it's about learning. And as you mentioned, that every single mistake, it's a great learning opportunity, but you have to learn from it, right?
Yeah, I think Lenka just now mentioned a great point is that instead of looking at traders on Instagram, which is probably going to make you very discouraged about your own trading performance, because on Instagram, a lot of influencers, a lot of us even, we post our highlight reels. Whereas if you really want to overcome a losing streak, you want to keep going despite losing so many times, it helps to read those books from successful traders, because they're going to tell you their losses, you're going to get inspired. So if anything, books over Instagram and TikTok.
Absolutely. I think because like whatever you see on Instagram is just the best part.
The best
right?
part.
The best. And just recently I was watching one reels on Instagram with one of the Czech influencers, and she was saying really great thing that like when we are watching Instagram, then we are actually comparing ourselves with the best of the best, right? The best models, the best entrepreneurs, the best artists, whoever. And then even if you are good, you still feel like the worst one, right?
Yeah.
And then she was saying like, everyone is telling me that I am like 2 out of 10. So when I was on the beach with my husband, I was actually looking for all these like Victoria's Secret models. And there wasn't even single one on the beach. And then she was like, that's exactly what you should do. Stop scrolling the Instagram and look around you, because around you is the competition, right? And it helps you actually then perform better, because you can see how others are performing, that you don't compete yourself with the best of the best. And especially most of them, they are like
influencers.
Yeah. So, and I think it was very well said. And whenever I think of myself as comparing myself with the best of the best, I always remember her saying the thing about the beach.
That's
and I think it's also great for traders actually to be part of some trading community, like a real trading community. Go to offline events, speak to people, because then you realize that not every single trader makes hundreds of thousands of dollars a month, like driving Lamborghini and because like no one shares really their losing streak on Instagram.
Yep. Even for anything, even for marathons, like a lot of people post like 30 minutes in 5 kilometers. But then when I joined the actual event, people are running 50 minutes, 1 hour for 5 kilometers. On Instagram, it's 30 minutes, 20 minutes. I was like, I am training so hard and I'm running longer than that. But then when I ran the actual event, it's like totally different story. So even for trading, like avoid Instagram, avoid TikTok. People are posting their highlight reels. It's going to make you feel worse about yourself, and hence you're going to get discouraged, you're going to quit. Whereas if you read books, people are going to share with you the losses, how they overcome it. You're going to bounce back a lot faster. So documentaries and books are great. Yeah.
If you could give one advice to traders who are struggling to, getting back on trading, what would you tell them?
For those who are struggling, first thing, of course, read the best books that you can find. Okay, some of the books that I recommend are Trade Like Stock Market Wizard. Second one is Market Wizards. There's another one called Hedge Fund Market Wizards. Then another one is called More Money Than God. That is about hedge fund managers on how they make money. Then the next one is this book called The Greatest Investors. Or is it called The Great Investors? It compiles all of the wisdom, strategies from the top investors, traders in the world. And a lot of people don't talk about this book. It's a purple color book. I bought it like last year. I'm reading it right now. It's super great. Peter Lynch, Warren Buffett, all the top big guns. Then these are the few books that I recommend. Of course, I've written a book, you can read it too. It's called Fundamentals of Currency Trading. It's on Amazon. And in that book, I also share about my losses, how I overcome my losing streak, all the failures. You can read through it, and then hopefully it makes you inspired. So, and also watch a lot of documentaries of the top traders, investors. And one of the shows that you can watch is this old documentary called Wall Street Warriors. Okay, that's a fun documentary to watch. It's not really a documentary, but more of a reality TV show, but it's quite inspiring too. Okay, and avoid Instagram as much as you can to get inspired, as well as TikTok and YouTube. And also depends who you follow too.
Yeah, absolutely. I have a few more questions to go through. One is like, what separates traders from the profitable ones and the ones that will not make it?
The ones that will not make it, they often like to chase profits. They focus mainly on earning money. How much money can I make? How much returns can I get? Whereas the profitable traders, the top traders that I know, they always focus on how much money am I risking in this trade. Whereas for the people who don't make money, every single time before they open a trade, they will ask themselves, how much money can I make in this trade? The top traders focus on the downside. The beginner, inexperienced traders, they focus on the money returns. When you take care of the losses, the profits will take care of themselves. Again, it comes down to risk management.
What are the non-negotiable rules that you have in trading?
Non-negotiable rules.
Do you have some? Like, let's say three, 4 rules that you always have to follow and you never break them.
3, 4 rules. Oh, that's a great question, because there are a lot of things that I look at before I enter a trade. So my criteria for a trade before I open it, it's about 7 to 8. It's like a checklist. It's like 1, 2, 3, 4, 5, 6, 7.
Okay, so what is on your checklist?
So first thing first, I would want to make sure that the checklist is 7 out of 8 or ideally 8 out of 8. I must check all the boxes. If I'm checking only 2 out of 8 criteria, no trade. 5 out of 8 criteria, no trade. Has to be minimum 7. That's a high quality trade. Okay, but of course ideally 8 out of 8. Then I'll enter the trade.
Okay.
So
what are these checkboxes?
It comes down to the strategy that I mentioned to you just now. Sentiment has to be in line. Fundamentals have to be in line. Intermarket analysis signals have to be in line. Then the risk to reward ratio has to be good. Okay, and then the technicals has to be in line. So technicals will be divided into confluence, price action, then the indicators. So that's already 7. And once all that is fulfilled, then I'll enter the trade.
Next one. Do you think prop firms are great for like traders, beginners to start with?
Yeah, that's a good question. I used to trade with prop firms 2-3 years ago, with the big prop firms. But for beginner traders, if you don't have enough capital to trade, then it's a good platform to start with. And of course, pick the good prop firms, because some prop firms, they come and go overnight. So the newer prop firms who's been around for only like 6 months, 1 year, you would want to wait for them to become more established first before you join that prop firm. Okay, but of course, if you don't have capital, go with prop firms. If you also want to improve on your risk management skills, go with prop firm, because prop firms, they have risk management criteria, like minimum requirements for you to qualify for that challenge. So if you want to work on that aspect, then you can join a prop firm. It also helps to cultivate your discipline, because when the prop firm has criteria preset for you, it's like you're gonna pass an exam. So it will force you to become disciplined and also to manage your risk better.
I think for I think for traders who are just starting out, it's a great way how to learn the risk management from the day one, right? Because I remember my first days in trading, I didn't know about risk management. Like I didn't know anything about it.
Yeah.
And then I lost all my money like within a week because I didn't know anything about trading. But if you start with prop firms, then you better learn all the rules straight away before you actually place your first trade, right? So from this point, I think it's a great way how to learn the discipline, how to learn the risk management, how to understand like everything that relates to trading, right? All the news and everything that's really, really important. Also, what I found really great in our dashboard is that we have also AI coach that actually analyze your trades and gives you some feedback. And then it's easier to learn from it because you have someone who actually tells you like, hey, you did this and this and this wrong. So it's better to learn about it because otherwise it's very easy to make mistakes on and on, right? I know that you are a mentor. So if you look back at your like mentoring career, what's the most common mistake all your students make?
I would say, again, it comes down to risk management because they would calculate their lot size just randomly. Now, the key thing is, just now I mentioned about your first week being quite catastrophic because you didn't manage your risk. Now, the thing is, it's human nature to just focus on the so-called sexy thing, which is the trading strategy. Because risk management, it requires you to learn about numbers, math, then it's like very boring for most people. Okay? Especially those people who don't like math back in school, they'd be like, Karen, I'm not here to learn math. Not here to learn math. I just want a trading strategy. So they ignore the lot size calculation, they ignore the percentage risk per trade, they ignore the maximum percentage drawdown, they ignore the art of placing stop losses, they ignore how to trail their stop. So those things don't sound exciting. Like, I'm here to become a trader, not to manage risk. But the best traders in the world, they are risk managers first, then traders second. So when we put our label, our self-image of ourselves as trader, we are actually risk managers more than traders. We are risk managers more than traders. So if you see yourself as that, then trading would be a secondary thing for you. The main job that you have to do every single day is to manage risk, and then the profits will come by itself once you manage your risk. So that's the most common mistake for beginners. They don't even care about risk management. Don't tell me about stop losses. Don't tell me about how to calculate lot sizes. Just give me the indicator. Just give me a strategy. You know, I could teach a whole lesson about risk management. I could teach a whole lesson about trading psychology, fundamentals, which are super important. Again, people will ask, yeah, Karen, that's great, but can you just give me the indicator? That's all I'm here for. Then I'm like, you don't get the point. It's not about that.
I mean, like some people, they think that it's just one silly thing that will make them profitable traders.
That one
it's
thing.
Like there is a secret that when you press this button, then suddenly you become successful. Karen, one more question. What's one thing that trader should never ever forget?
Once you take care of the downside, the profits will take care of themselves. So when I tell myself this all the time, before I open a trade, I will look at the risk to reward ratio first. I'll look at the how much am I risking in this trade first, instead of looking at how much am I making in this trade. So I will look at the risk first, the downside first, before I enter a trade, and then everything will take care of themselves. So that's the quote that I tell myself all the time.
By the way, last question. I know that your nickname is Brittany.
Yeah.
Why Brittany?
It's just like a private name that my friends call me, like the people in my circle, like my family members and my friends.
You don't like Karen?
Karen is like who's this? Lady Gaga. She has a stage name which is Lady Gaga, but her real name is Stephanie. So my so-called real name is like Brittany, and then Karen Fu is like a so-called public name. You can say that. So it's like a different persona altogether. That sounds weird, right? Persona.
A little bit, yes.
So it's like you heard about this thing called alter ego? Yeah, so it's like an alter ego kind of thing. So
nice
it's a different thing.
Okay, so Karen or Brittany, thank you very much for joining me today here in Singapore. And for you, I hope you enjoyed the interview. And if you haven't started following Karen on social media and YouTube yet, then make sure to subscribe.